the PT party, we should accept that it has happened.
Okay.
And then we should join the various groups. There are very many various groups willing to help. And then to the financial institutions, PEBU has started with introducing the microcredit. We came up with the PEBU Care. PEBU agents will be testifying to that. You're able to borrow from us if you're an agent. So that, from our experience, we conducted a survey and realized that most people have stopped working because they no longer have the capital. That is why we came up with the PEBU Care. So I call upon all the financial institutions and the regulators to ease on the fees and the onboarding processes for anybody who likes credit.
Okay.
Yes.
Thank you so much. And as we wind up our panel discussion this morning, this one goes to all of us here. Would we have more women financially included or digitally included if we, the players, or you, the players, adopt the level 1 project principles, for example, the KPIs?
Yeah, absolutely. I think the answer to that is yes. Because as in the e-commerce sector, for example,
yes.
The biggest problem we're facing right now is trust. People do not trust that they'll actually get their goods. People do not trust that the sellers will settle them. If you're probably now, like for an e-commerce industry, you have to look at the sellers. Are you settling them the same day, or are you waiting for at the end of the month to give them their money? So such issues have to be dealt with fast. So if we can have clear KYC, for example, so if someone wants to actually get a loan, you actually know where they are from, and this will actually encourage more women participation because of such ground rules that are put in place. So tiered KYC, we're talking about just money back guarantee. If someone doesn't get their goods back, are you going to give them their money? So such fundamental principles in, for example, e-commerce, are really what we need to encourage more women to participate.
Thank you so much, Lynn. We go with Barbara, then Susan, and Yvonne last.
My answer to the question would be a big yes. And how would we do that? If every regulator includes women in the decision making, we would be there. If there is increased accessibility to the financial services, to the credit, we would be there. If there is ease in the application processes, you realize that when you look at the regulations and the requirements they have put out for anybody to become an agent, they'll ask for Interpol Certificate of Good Conduct. Not everybody is going to get that. It is costly. It is 80,000, I think. I stand to be corrected. If we ease the regulations, I'm sure we'll have more women included financially.
Thank you so much. Susan, then Yvonne.
It's a definitely yes for me, because as a developer, one of the principles, the KYC, if I know my client or customer, I'll be able to design a solution in line with the needs of my client or customer. So I believe that is one of the ways we can have financial inclusion. Then also the same-day settlement, it would help users with decision-making, because they have so many things to take care of, but if they are settled on that very day, they'll be able to make their decisions according to what they have.
Okay.
Thank you very much. Before I go to the level 1 project response, I would like to respond to the one that I missed about what do we think can be done to be able to solve some of these issues. And I thought that we cannot miss two very important factors. When it comes to recovery, of course, digitization is a must, but there is one thing that actually governs everything, and that is ensuring that we're healthy. By following the very simple, basic step of washing our hands, we are actually able to prevent 90% of diseases. As women, as mothers, as people who actually are the mothers of the nation, we have to start by that, because everything else starts with good health. So my recommendation would be, yes, we digitize, yes, we embrace technology and the new normal, but perhaps the most important new normal is ensuring that we're healthy by washing our hands. I can justify that. I haven't had a cold call since March. That's because I've been more vigilant in washing my hands.
That is very good. That is very lucky for you.
And finally, regarding level 1 project. Okay. Regarding the level 1 project, which is the real response that I'm supposed to be we are aware that more than 2.5 billion women are actually unbanked. And the whole aspect of ensuring that we get more women included is by, yes, building trust, but most importantly, sensitization. Many people out there, a lot of efforts have been done. A research was done by High People in April this year, whereby we discovered that more than 90% of women actually love the technology, but just needed to be aware of how to use it optimally. So with the right partners, with the right pioneers like you and I, we can actually ensure that more and more women use technology by ensuring that they gain trust in it and then apply it. That's as simple as it is, because today you can digitize with the basic.
Thank you so much. Thank you so much. Thank you so much. This comes to the end of our discussion. And there you go is King Wesley. The king of the mic is going to take us through the rest of the program, and you follow me, ladies, to take a picture there. But one thing that you don't have to forget, but you have to bear with, is wearing a mask. You can be sweaty a little bit, but it is worth it. Very good morning. Please, ladies, follow me for a photo moment. Thank you.
Yes, still good morning, ladies and gentlemen. Good morning, ladies and gentlemen. Are we okay? We sure? Let's give it up for Rita and the panel of the ladies here who have been a blessing. To remind you, we're live on social media and we're also live on actually NTV right now. So you can probably send somebody a message who is at home and then let them know that actually we are live here. One more time, I want to welcome you to the Digital Impact Awards Africa and also the Include Everyone Summit. And today's December 11th, just a few days, and we kick 2020 out of whatever. But to remind you, COVID is super real. In fact, you should actually keep the social distancing, which is actually already assured. And also, please make sure you have your mask anytime. All the time, right? So I have mine here. Thank you, High People, for availing me with a mask as well. And of course, I'll make sure that actually everyone here has got a mask. If you don't have a High People mask, please make sure you get it, because it's it's entitled for you. So you will excuse me. I will not be able to put it on so that I can be able to communicate very well, but I'll be good to go. All right, okay. I'm called the King of Radio, Wesley. Very married, and today we're going to talk about quite a lot of things, but we're going to talk about really securing the fintech ecosystem, and of course how do we even effectively also collaborate. To be on my panel today, I definitely want to welcome the different people, but before I go on, I want to recognize the presence of Professor Maggie Chigozi. You're most welcome. And also we have Pegasus representing Mr. Ronald, we have Stanbic, we have that's Mr. Paul Tamale, we have Bionic as well, Standard Chartered as well is represented, and I see Movit, I see everyone here. We are super in high gears. I want to go straight away so that we can actually redeem some time, given the fact that actually we are live on NTV. Let me welcome my first panelist. This is beautiful. I think it's not the first time I'm going to meet. Probably we're here together sometime back. Let me welcome Jen Mugenyi, Head of Strategic Partnership and Corporate Sales, MFS MTN Uganda. We'll also be followed by Ronald Azeire, Pegasus MD. We'll have Paul Tamale, Stanbic Manager, CAD and Acquiring. And also we'll definitely have Nathan Levy Dragudi, Standard Chartered Implementation Manager and Transaction Banking. Please let's clap for them as a can. How are you, ladies and gentlemen? Are we all good?
Yes.
All right, okay, so I'll give you probably one minute to just introduce yourself fully. I may have left some of the titles and what you do exactly. I'll start with you, ma'am. Please introduce yourself so that people are going to get to know exactly who you are.
My name is Jane Mugenyi. I work with MTN Uganda. Sorry. I work with MTN Uganda, and we support digital finance, that is mobile financial services, to ensure that companies...
456 million mobile phone subscribers. With the fastest penetration worldwide, it's hard to imagine that some are left out. In Uganda, 1 in 2 adults use mobile phone technologies. These services are growing rapidly and opening the door to the development of digital services that can impact millions. Yet there is still a big number of people who are left out of the digital economy. Smallholder farmers, women, and youth.
All right, thank you very much. All right, okay. You're still introducing yourself, and we are interrupted, of course.
It's all right.
Yes.
Good morning to you all. My name is Jane Mugenyi. As I've been introduced, I work with mobile financial services at MTN Uganda. We support digital financial inclusion and also making sure that our customers, not just individuals, but companies, are integrated with a platform, and we ensure that our open source is equally utilized, and also the infrastructure for telecommunication is effectively used to drive financial inclusion.
Thank you very much.
This one, good morning. My name is Ronald Azirwe. I'm the Managing Director of Pegasus Technologies. We are a fintech and a payment service provider, and we work with quite a number of your institutions here, particularly banks, telecoms, utilities, and others at consumer services.
Thank you.
Thank you. First, thank you to the organizers for having us, and good morning, everyone. My name is Paul Tamale, and I work with Stanbic Bank, where I look after card and acquiring business, and really it's to extend the card and acquiring banking services to all the potential providers of consumers in this market. Thank you.
All right. Good morning to everyone here. My name is Nathan Levi Dragudi Ochatre. I am an implementation manager working with Standard Chartered Bank. My focus is around the areas of cash management and also trade finance, and of course with a very heavy divergence into financial technology and how we can play within the digital space around those two.
Thank you very much. And of course, I definitely want to really go real quick, and I'll definitely first start with you, Jen. 2020 has been really highlighted with COVID, by COVID-19, with the digital financial services keeping economies and also the values of economics now moving, and the people safe as well. As a player, in this industry, how did 2020, unfold for you? And of course, this is a question that I really want to also put to all of you here. How did 2020 really unfold for each one of you from your respective, places of work? I'll start with you, Jane.
Thank you very much. So I'll start by speaking about what we did good in 2020.
Yes.
We know that 2020 was a challenge, and MTN was not an exception to this challenge. We were impacted by the COVID, something that we are all not prepared for as businesses and individuals. But what we did in order to facilitate our customers and our partners to do better or to work better is ensure that we have the right infrastructure in place for connectivity so that people can work from home. But also, we made our services available because we realized the challenges that our customers and partners were experiencing. And one of them was free person-to-person services, whereby you could send money to each other at no charge. And we did 50% reduction on cash out fees, but also the results that came out of that gave us an indication of what we should charge in terms of cash out and P2P rates, which have been reduced considerably. MomoPay growth, all of you, if anybody knows MomoPay, that is the merchant payments. We did a double-digit increase. That means that many people were coming in for adoption and picking up services and appreciating payments. We did a Momo Nyabo campaign to facilitate giving back to communities. And then recently we launched a Christmas promo for merchant payments, which will give you a 5% discount when you pay services using digital channels. In the area of corporate responsibility, social responsibility, we partnered with the Ministry of Health, the Ministry of Health, to facilitate them in terms of transportation, but also give sanitary pads to ladies that were in the COVID treatment centers. We facilitated 22 water points in challenged communities in Kampala. And the key highlight for all these activities is our milestone was 45 million growth of customers across the group level. What were the bad things that we experienced during the pandemic and 2020? We all experienced a drop in disposable income, and that means that the users were spending less on the network, definitely, and the values that were being sent across were also reduced, which was obviously a function of the pandemic. But then also we saw an increase in fraudsters challenging digital adoption. I think some of you have been subject to people calling you and saying, please enter your PIN. So that increased a lot, and it comes with digital adoption. We had a difficulty accessing telecom sites when there was downtime, and that means that some of us experienced downtime. You could not call your families, but this was because we could not access some of these sites. Then, of course, finally, some of our frontline staff were affected as well. So that meant that they also got sick and were shut out from working in office, and mainly because we had to serve our customers the way we had to.
Yeah.
So that is it.
All right, thank you very much. Please, Mr. Ronald.
Thank you again. I think it's been, as Jen has rightly said, one of the biggest challenges of the year has been a reduction in people's income. For some products, like those of us that have a school fees product, that was completely obliterated, so there was no revenue whatsoever from school transactions. And other revenue streams that were not operational. She did talk about their MomoPay service, for which we partner quite a bit. So when restaurants and all these other leisure places were closed, obviously that meant a reduction in revenue. Yes. And she touched a very important point on the fact that when we had to suddenly, and the key word there is suddenly, work from home, the preparation in making sure you have the right infrastructure to work from home was rather hasty. We didn't have sufficient time to prepare for this, so we quickly had to put up just the requisite infrastructure without perhaps giving it as much thought as should have been for people to work from home. What that did, incidentally, is that it also opened up back doors for fraudsters who might have wanted to have opportunity to take advantage of that. So again, we saw an increased trend in fraud activity and also a dip in revenues. But the upside, again, has been that we've seen a greater intake for people adopting digital technologies, for payments, for collections, and so on. So I think to a degree, there's been a bit of a balance out where we see an uptake, but we also see some other challenges that have brought down the kind of revenues or transaction levels that were existing before or pre-COVID times.
All right. Mr. Paul.
Yeah. So I'll ride on Ronald's last point in saying that before 2020, our motivation to drive the cashless transaction capability was mostly behind seeing that we can offer convenience to our customers and protect them from the risks that come along with using cash. Straightforward into 2020, the pandemic was upon us, and we then had another incident that came up.
Yes.
The safety of our people.
Yes.
So cash was one of the methods in which the pandemic was spreading. And as banks, we had to quickly move and see how we could quickly close that gap. And as you saw from us as a bank, we quickly went out and launched the prepaid cards. And what they're all about is, you don't have to have a bank account with us.
Oh, yes.
But you can operate a prepaid card, and you can use it to pay out at merchants, use it on e-commerce, and that way you're prevented from using cash as you would even without a bank.
Yes.
So the other thing that we've done, of course, working with our global partners, Visa, it's now a mandate. All of the cards that we're issuing are now contactless. So you don't even need to hand anybody your card, insert it into a point-of-sale machine for you to complete a transaction. All you need is to tap it, and if it's above a certain amount of money, then you'll enter a PIN. But really the interaction between yourself and whoever it is that you're paying is now much more reduced, making it a safer place for you to transact for the card-present transactions.
Yeah.
And really keeping our customers safer.
Yes.
So that is part of what our experience has been this year.
Oh, thank you. So, Mr. Nathan from Standard Chartered, how were you affected by the pandemic?
Well, firstly, and admittedly, 2020 has been a very challenging year.
Yes.
For the individuals that have had to go through the ordeal of the pandemic, for the businesses that have been impacted, and more so for the bank as a business itself. With the pandemic, we saw sharp twists and turns in the flows that we usually see from our clients.
Yes.
And that was really turbulent for the performance of the bank. Now, it being a grim period, we could also say it was a blessing in disguise, more especially for we at Standard Chartered that pride ourselves at being at the forefront of digital innovation. For many of you that may know, we have endeavored and made sure that our journey that we ensure for our clients, both at the retail level, at the corporate level, is a very digital journey, something that creates efficiency for those clients. Now, whereas the uptake was there in the past years, this period has seen a drastic uptick in the services, and we have experienced a lot of penetration.
Yes.
Clients using our online app for the retail clients, the capabilities for corporates to make movements of their funds, carry out their trade finance transactions on the online platforms has really added value to their businesses, way and above what we had anticipated in this period.
Thank you very much. We'll definitely have to go now back to you, Jen, being that you actually work with in MTN. Now, a few months ago, the industry, the telecom industry witnessed a mobile haste, mobile money haste, and it actually really, multiple players were really affected. I remember it was one of this talk, and of course, lots of speculations was actually going on, and at all different levels. Now, how do you think, or how are you trying to ensure that we do not have, the same situation come 2021, or even still in 2020 right now, because, we still have some days to get done with it. How? Is there now any other measures that have really been put across? Because it was a big one, really.
Thank you very much. Yes, there was a money heist, like you call it, but I can assure you that the customer wallets were not affected, and this is still under investigation. So I would not say much about what happened, but what I would say is, being a technology platform, we have continuous controls in place, both using external and internal auditors, to ensure this does not happen again. We will continue sharing experiences with our partners, but I would also like to speak more about using digital identity as a platform in order to reduce such cases. Because if we know that if we have a digital identity of somebody who performed a very suspicious transaction in MTN,
yes,
then we could share with StanChart, we could share with Airtel. And if this same person goes to obtain services in these areas, they should be kind of blacklisted.
Oh, yes.
So that's how I look at it, having a collaborative forum that understands how this platform works, and we share experiences in terms of what has happened on your side, what is happening in the banking sector, so that we can mirror it into the telecom sector as well.
Interesting. Now, I'll definitely go to you, Mr. Ronald. Now, KYC remains a big challenge in the industry. Now, customers are always, inconvenienced by many documents asked for the players all the time. Now, why aren't we achieving the level 1 principle, of course, tied to KYC yet?
The issue of KYC and the inconvenience that comes with it, I think, is something that we're going to have to live with for a while. As we adopt digital technologies, the most important thing, as Jen said, is to have every individual's digital identity. Now, for those of you that travel quite a bit, you know how much inconvenience you go through at airports, especially after 9/11. The intrusive checks that you go through, the turning up and down and take off your shoes and your belt and so on. Now, in the digital space, the equivalent for that is making sure there's a rigorous process of identifying every individual and tying every transaction to an individual. Yes, it's a bit of an intrusive process, I agree, but again, it's a very necessary evil. There is nothing we can do to avoid that.
Yeah.
The advantage we have now is that we have a statutory body in NERA that is responsible for collecting as much detail about a person as possible. And the pervasion of the national ID now in all the spheres of our interactions is very evident. So what we want to do now, and I'm sure there's legislation ongoing currently, and I'm sure policy will come into place, that will ensure that everything digital is tied to your NERA identity. What that does then, it ensures that we can tag every transaction to an individual. And this individual's details are not details hastily given. These are details that are picked from the NERA database. So I think that the loop is closing. There's been a gap that a lot of people have been exploiting where they give out, because the collection of information has been siloed. Every institution has been collecting its own KYC. And of course, that's a bit of a flawed process of doing things. So you have one identity at MTN, you have one identity at Stanbic, you have another identity at Standard Chartered. What the unification or the centralization of all this does is that we have one point of truth. And if we can have one point of truth, which is the NERA national ID that tags everything to an individual, then I think we'll have closed that loop quite a bit. And I hope this is the way to go. I hope 2021 will be the year that NERA allows all parties that are involved in these processes to interact or to integrate into their database, and giving them the requisite information that ties everything to an individual.
Thank you. Interesting. Now, one of the biggest challenges we are facing in the fintech industry is working in silos. What must be done for the industry to outgrow this? I'll definitely really forward this question to you, Mr. Paul.
Yes, so thank you. For us to achieve total inclusion, we're going to have collaboration between all of the players.
Yes.
That includes the fintechs, the regulators, the financial institutions, the banks.
Yes.
That is very clear to everybody at this point. So for the longer time, the banks have dominated this space, and they have done it by partnering with global partners who have a very strict entry criteria, and also that does not allow for so many of the players we have locally to play. So then that does not allow us to scale as much as we would, because as you would know, fintechs have now proved to be very beneficial in the inclusion journey, and seeing that we can finally reach out financial services to everybody in this market. So what we then need to think about is, how do we build a platform that can have all of the players universally playing, but maintaining security, the multiplier effect of the points of reach for financial services, seeing that it's still secure and maintains the risk framework that our end users, and seeing that at the end of the day, it allows for fair competition in the aspects that really touch the end user, that is in terms of pricing, the quality of service, the reliability, and things of that nature. Thank you.
Thank you very much. Now, Mr. Nathan, what has your organization done in 2020 to bridge the gender diversity in the fintech industry? If you can actually give relevant, examples from your organization, that would definitely also be beautiful.
Okay, thank you. So for us, we have understood that disparity between the traditional banks and the fintechs, and we have remained open-minded to having some of these collaborations. So and the end drive for us in this is around financial inclusion. For example, we have invited collaborations with a couple of aggregators so that if the gap that we had was between the corporates and the end beneficiaries, probably farmers or people out in the field, such collaborations between the bank and aggregators have enabled us to play in the space like mobile money services, where through either our retail app that individuals use or the corporate platform straight to bank, our clients are able to make these payments directly from their accounts to the mobile money beneficiaries direct on their phone wallet. So that's an example of some of the steps that we have taken. It's also an example of how we are adapting to some of these disruptions that are coming into the market.
Interesting. Thank you very much. Well, ladies and gentlemen, I think this really brings us to the end of this panel discussion. And I definitely want to thank you very much. And of course, do I have any question from the audience? If there is any question from the audience. Well, if not, let me welcome Mr. Nicholas from Higher People to definitely also submit in his review. But for now, thank you very much, gentlemen and lady. You definitely follow me, and we go out there and we have a photo shoot together. And please keep your masks on. Thank you very much. Please clap for me.
Thank you.
All right. Thank you, Wesley. Morning, everyone. Nicholas Kalonji is my name. I'm the Chief Operations Officer of High People. First, allow me to welcome you to the 7th Digital and Financial Inclusion Summit, the Digital Impact Awards Africa. I'm happy that we are here again. These have been 7 years since 2014. Usually life is won by consistency. The Digital Impact Awards Africa have been consistent for 7 years, and we hope and promise that we can only get better. Allow me to thank all the entities, individuals, organizations that have trusted us since 2014. The telecoms, the banks, the fintechs like Yo Uganda, Bionic, Pegasus, Malan Group, Kanzu Code, among others. They have been with us all this time. All the success we are getting, it is because such big entities have had trust in the system and the process. In the same spirit, allow me to thank the individuals that have been with us for all this time, for over decades. One of them is Honorable David Kalubanga, who should come here very soon, or better still send a speech. Our patron, he's the State Minister for Public Service, and also the Member of Parliament for Kigorobia County. He has been a friend of the ICT industry. He has been a friend for the fintech industry. He has been a great contributor to the success of digital and financial inclusion in Uganda. In the same spirit, I would like to thank Professor Dr. Maggie Chigozi. For all this time, she believed in the process, she believed in the project, even when we had nothing to show. Even when we are saying the event is going to be just online. Even when we said it's just going to be a meeting, Professor Maggie Chigozi said it's fine. If it is a meeting that is pro-development, if it is a meeting that is pro-inclusion, I'll be party to it. I'm happy to see her today. I've been seeing her on these events for now 8 years. She never misses, 8 consecutive years, to such an extent that at one point, the lazy media people, there's a difference between journalists and lazy media people. The lazy media people concluded that maybe Professor Dr. Maggie Chigozi is the owner of High People because she never misses. Now, to put it straight, the good professor has believed in the project the same way she has believed in so many other projects. She has no problem you saying she's part of the project or she's the owner, but the fact is she's a believer in transformation and development of Uganda. She has been with us. She continues to be with us. We are always grateful. Lastly, again, I thank God for bringing us here and keeping us safe and moving. Life is becoming hard. Like Wesley said, COVID is very real. COVID is very serious. Social distance, wear your masks, sanitize, work on your immunity because it is serious. Just today, 5 people who are supposed to be here haven't been able to come because 3 of them tested positive for COVID. So when people say COVID is serious, please take it as a serious matter. Because you only prove that it is very serious when you're on oxygen or when other people are burying you. That's when you actually remember that the COVID talk was serious. With those so many words, I don't want to take a lot of time. Allow me to invite the popular Arnold Segawa to take us through the next panel discussion. Arnold Segawa, please. Yes, Arnold. Arnold Segawa is a good man. And I know people like his voice. To be specific, ladies like his voice. Thank you very much.
What an introduction. Thank you for that, Nicholas. First, I want to thank NTV and Hi People and all the lazy media people that Mr. Kalunji alluded to. They make our work so easy. I mean the real media, not the lazy media people. Ladies and gentlemen, very good morning. I'm Arnold Segawa, and thank you again for making time to make it today. Allow me to introduce the next panel, which is going to be on building the rails, interoperability with the private sector-led real-time payment switches. To help us understand and unpack this particular conversation, we have Kanzu Code CEO Peter Kakoma, John Mark Sebunya, who is with the Fintech platforms, architect Doreen Lukandwa, who is with the Bionic. She's a director of marketing and customer success. Paul Tamale, who's with the Stanbic, the manager for cards and acquiring. And last but not least, Nathan Levi, Oktar, I hope I pronounced that right, with the Standard Chartered Implementation Manager, Transaction and Banking. I got right into it. It's only fair that after such an introduction, I do not dwell a whole lot going on about all the things that my panelists here are going to be unpacking. Please allow me to welcome my panelists today with a few hand claps or two. Many familiar faces if you've been coming to many of these sessions. Let's start this off. Maybe all of you, for just under 2 minutes, you could just help us understand the vital and critical role of interoperability, let alone clearing payments in real time. Please, let me start.
All right. Thank you for the opportunity once again. For me, what is core about these real-time payments is the financial inclusion. And I always like to start with the fact that financial inclusion is not necessarily about having bank accounts. It's really about a swift move away from what is the physical cash. And we also need to understand the trends in the market, in the economy. What customers, what clients are looking out for is efficiency. And with that comes the need then for we as the financial institutions, the different developers, fintechs, to come up with such solutions that we can leverage on to offer these services, build scalable products that we can use across the full board of whichever class of clients that we're dealing with.
Great. In just under 2 minutes, yeah.
Thank you very much, Arnold. My name is John Mark Sebunya. I'm in charge of all the technologies that serve fintech in the MTN group. That means all across Africa. I'm very honored to be on this panel to discuss financial inclusion. But just very quickly, simple figures that are always thrown around. It is said that we do have 1.7 billion people around the world who are not yet financially included. Of these 1.7 billion people, 1 billion is women. Now, the question has always been, why have we failed to include all these people financially? This 1.7 billion people that is dotted around is actually an improvement. About 10, 20 years, it was about 2 billion. We have failed to include people because of cost. In very simple terms, it has been an issue of cost versus the revenue. Traditionally, we've known banks have existed for hundreds of years, but the banks that have existed never included everyone because it didn't make business sense. Then we got to an era where we saw digital coming up. When we got to the digital era, it became a little bit cheaper or easier to serve the masses. But nonetheless, we haven't yet achieved inclusion for everyone, even when we have digital. There is still a cost element. The players that are currently spearheading digital still have challenges on the cost of their platforms, on the cost of moving money, on the cost of operating and securing platforms. So it's for this reason that we still have more people excluded. Thank you.
Right. That was just over 2 minutes, John. But fair enough, fair enough. You've thrown around some fascinating stats from 2 billion, 1.7. Of that, 1 billion is women, as it turns out. Let's continue on that particular theme to the rest of my panelists. If we're then to bridge that figure or cut it down to, in a timely manner, to maybe a billion, how then do we bring in the conversation of real-time clearance or the interoperability for that matter to help bridge that particular gap in the shortest possible time, please?
Thank you. And so I like the point that the two panelists made. So to achieve total inclusion, we're going to have partnerships between all the fintechs and the banks, because the banks cannot achieve it alone and neither can the fintechs do. So traditionally we've had interoperability between the banks, and it's existed in a way that is not real time as we have seen it. Technology now has allowed for a precedence in other ways that we've seen away from financial institutions that allow for real-time payments. Surely for the banks as well as the fintechs to interoperate, there has got to be a framework that allows for us to offer the same to our end users. And in doing this, we must be able to offer it in a platform that allows for us to still maintain the risk and security framework that we are currently having. We must allow for scalability of the touch points for our different end users, because that's when the benefit will finally be realized from an inclusion perspective. And then we must also look at building technologies that allow us to quickly release services to our end users in a way that is timely and allows for quick adoption into our market. Thank you.
Doreen, let me come to you. I think the conversation as we move forward then moves away from just hastening the process of fast payments and clearance and all that, and then maybe it evolves into the security issue, which might actually be the big elephant in the room. Yes, collaboration is one thing, but how worried are you, or how do you brace for the security issues that arise with this kind of clearance that is, let's face it, in record time?
Thank you. I think it's important to demystify what interoperability means. And ideally, a good example is the fact that people can now send money from an MTN account to an Airtel account. Another good example is through aggregators like Bionic, like Pegasus, like Yo, you are able to send money and receive money from all the telcos within the country. So the way interoperability is coming into play is that it's bridging the gaps between one platform and another. And many of us in this room have heard about the Africa Free Trade Area. What that means is that Ugandan businesses are going to be able to transact with customers across all markets in Africa. And we all know, based on the experience through COVID, is that there are limitations with cash. When I think about risk, I think about how expensive it is to move cash from Uganda to another country. I think about how that cash could be stolen. So the short version to that question is that digital payments actually de-risks the business opportunity. It means that where businesses in Uganda were transacting with 46 million customers or less, they will now be able to access over 1.3 billion customers across Africa. And the safest way to do that is through mobile money. And how interoperability complements that is that you will be able to send money from here to a customer in Nigeria, in Ivory Coast, in the Congo. You will be able to receive payments for your goods from those markets through interoperability. So in my opinion, digital payments and interoperability is de-risking the process of getting money from one point to another, thereby boosting this economy and everybody's business.
You've touched on some very interesting points. Obviously, the African Continental Free Trade Area, which, over 20 countries have ratified across the continent. But the big elephant in the room for me would be the fact that for a digital currency to be adopted across the over 54 countries, with the exception of Eritrea, it's the only one that hasn't signed the African Continental Free Trade Area, you would need this vast adoption across all the countries. President Cyril Ramaphosa, South Africa's president, mentioned the other day that they're moving towards an Afro, a digital currency for the continent. Is this then the next step? Maybe the two of you could touch that, then I come back here.
Thank you. Thank you very much. I think, yes, it is a good next step, but maybe it's key for us to get the first step in, get all the players on the same table, at least thinking in the same way around this all-inclusive finance. It's easy for us who have easy access to financial services not to see a huge impact of what not having them is. Because when we just say financial inclusion, it's easy to miss the fact that during COVID, when people were constrained, many had the access to reach out to friends and family or reach out to a financial institution of various kinds to get some kind of financial assistance. So what John Mark was pointing out is over 1 billion people across the world don't have that access to financial services. So that's what financial inclusion is about. It's making financial services, credit, insurance, accessible to those 1.7 billion people across the world. So interoperability is very key as the first step, yes, which is what we are belaboring here. But yes, a single currency would help, would be a next step, but we would be jumping the gun to speak about the currency, because the currency is not necessarily key for interoperability. You have the Visa, MasterCard network that's allowing banks to make things possible across the world, yet you will send money from the US and receive it in Uganda. You're not using the same currency, but you're still benefiting from financial services, from an existent infrastructure, which is what we are belaboring here. We need the infrastructure beyond the currency. We need the infrastructure. We need the players on the same table accessing infrastructure that's making it possible for the person in Chiliadongo to receive financial services. Yeah.
Doreen, just 30 seconds, you could wrap that up.
Yeah, and to add to that point, ultimately it's dependent on the tools of trade. It means people need to have mobile phones. It means riding on the existing infrastructure that the MNOs have put in place. And it also means creating value. People will not use something that is not addressing a need. For example, during the pandemic, everybody was stuck at home and working remotely. So it meant that we needed to get creative about how we continued to run our businesses, how we continued to get access to essential services. And in that being said, digital payments actually helps to bridge those gaps, to solve to give a solution to the problem that I am facing at that point. That includes health, that includes trade, that includes education, and that includes money transfer. So ultimately, using these rails that have already been created individually or domestically, interoperability creates value on a larger scale, connecting all these different dots to address a need that is specific to somebody in a specific market. So I think that as long as we continue to create value in those different pockets, you will see an increase in financial inclusion.
Right. Ladies and gentlemen, if you do have a question, burning question, you can always just raise your hand. I'll be happy to drag this particular mic to you and you do your magic. Let me come back here. There was a few years, I think more than a decade ago, the elephant in the room was, well, I won't say elephant in the room again. It was, financial inclusion was almost equal to owning a bank account. Then came the mobile phone, and then it became mobile money, owning a mobile phone that has a USSD capacity and capability equaled financial inclusion. What now, in your expert opinion here, maybe all of you could give me a short answer to this. What then is the next step? Away from just a mobile phone, away from USSD, away from an app. We're seeing banks closing branches right now because their apps are quite powerful. Let me just start here. Maybe you could just touch on this already.
All right. Rightly put, there's a steady shift away from what was seen as traditional, and it's really key upon we to pass on to the communities the knowledge that is available. Things like how can institutions benefit from cloud computing and make the best out of it. We've had mentions of open sources, particularly for the corporates. How can they leverage on such open sources, APIs, to build services that can then work in a way to drive more of this financial. Sorry. Yeah. How can they ride on these open sources, utilize these APIs to build services and financial products that can trickle down to the last man standing in the chain. So those are some of the shifts that we can see, particularly for the corporates, for the fintechs, for the telecom companies who are involved in this journey to promote financial inclusion, to make use of cloud computing, open sources to build financial products that they can pass down to the end beneficiaries.
John.
Thank you. To your question, what is the next step? I would answer it as interoperability is the next step. How do we get to the point whereby interoperability is the next key step? When we talk about financial inclusion, we talk about access to an account, using an account being affordable, and service being available. These are key things that come up when we talk financial inclusion. Now, there is a realization that people get these accounts, but they can't use them. If I go to a merchant and I have maybe an MTN account, and the merchant has an Airtel account, I may not be able to pay. So there is that realization that now, over and above just having accounts, how do we make sure that people can transfer money without worrying about the network where I am, the bank account where I'm connected? So interoperability has become a very important point in the next step. There are studies around the world on countries like India, which have implemented what we call digitizing me, the national ID. I think one of the panels talked about it. They have a project called ADHA, where they've given everyone an ID. Now, that's one element of it. Over and above that, they've done what they call the UPI payments, whereby you can now be able to connect and make payments with whatever banking platform or fintech you connected to over UPI. Now, there are cases like in China, where you talk about the likes of Alipay, the likes of WeChat, who have gone to the level of making interoperability natural. So what we have in our own markets now is a case where we need to work more collaboratively to see that nationally in Uganda, we can be able to move money across different stores of value without worrying about where an account is located. So interoperability is key, and that's something that we need to address with real-time payment systems.
You've given some fascinating examples, China, India, without a doubt. For the example of China, they've gotten to a point where the likes of Tencent, WeChat, Weibo, it's like everything is in there. They have their own Uber, they have almost their own Airbnb, everything is just in one app. And all of this sits very well into the government setting also, the public side. How essential is it now for the public side to liaise with the private sector? God knows you guys are miles ahead of the public end. How essential is it for them to come to the party? God knows you might be 10 years ahead of them. Let me start with you.
Yes. So I think to answer the first question that you had, I think the next step is more collaboration. As different players, we have done a lot to see that we can scale and advance the different technologies that we are extending to our end users. And those including the public sector and many businesses in the private sector and the individual users like you and myself. So this has included conversations widely with what is it that our end users are looking to get access to, what are they looking to access from us as banks and as fintechs. And it has also included government. You might know that most of the innovations that we've had around e-commerce, for example, have been enabling in the government space, the payment of taxes, for example. So Uganda as well is adopting the trends that we are seeing in other markets. But to answer your question, it's in more collaboration, more discussions, discussing, making it more convenient for our end users, increasing the touch points, the methods of payment, and that is how we get to achieve inclusion at the end of the day.
Doreen, as an aggregator, and although the media was quite rattled sometime this year when MTN and Airtel were in the news for quite an interesting story, though they were not really giving a lot of details. Again, going back to the security question, how worried should someone be if so much power is being given to aggregators? And maybe you might not be the right person to answer this because you're going to, say, we're going to soldier on and, we're doing the right thing. But how scared should we be if all this data is being given, let's say, from the John Marks of this world, who are on the other end of the equation, to aggregators who are, for lack of a better two words, middlemen? How worried should we be?
I think ultimately with the introduction of anything new, there is a risk of people who are thinking in the opposite, who are thinking, how do I penetrate this? How do I take advantage of what's already in place? So as an industry and as a market, the onus is on us to think about the best ways to protect our customers and ourselves. And I think that's where you've seen a lot of collaboration within the different sectors, but also between private and the public sector, where even the central bank is coming up to play a part in developing regulations that are going to help protect the customer. So I think what happened is something that is not a surprise, because there are people who are trying to test the boundaries and push them as hard as possible. But from that, we have learned lessons. We have learned how to become more security efficient. We've learned where the loopholes are and how to plug them. So we keep evolving over time. And I think that we have to be open to that, to being able to learn from the mistakes, to being able to learn from those who are pushing our boundaries and our buttons, and developing more secure measures to protect everybody.
Okay. If we're to talk about level 1 principles that maybe could be adopted to make sure that the process of hastening interoperability is faster than fast, if I could say, what would you say stands out, top of the list?
Well, it's quite hard to pick the level 1 principles apart because collectively they are an embodiment of really, really key tenets that are necessary for that problem to be solved well. So things like real-time payments, why is that important? Because one of the reasons people want to use cash, one of the reasons the mama, when you go to pay for that matoke, one of the reasons she wants to use cash is, she receives it instantly. So if you're telling her, let me pay you with mobile, with a transfer to your bank account, then she has to go and wait in a queue, it defeats the entire purpose. So it's very hard to say which of the tenets to pull out and say this is the key one of the level 1 principles. If I were forced, I would default to saying they all work together very well. The real-time payment, real-time settlements, they push so that someone is not pulling money from your account. They really work together very well. But if I had to be pushed to choose one of them, I would have to say maybe the real-time aspect, if I had to choose just one.
John Mark, in 30 seconds, which one would you choose?
The key element here is instant, whereby our people have now got accustomed to instant payments. So the key principle that we'll look at is real-time payment and settlement, as my colleague has identified. But over and above that, there is tiered KYC that I would add, because if we are going to include everyone, we have to be cognizant of the fact that some of our people across Africa may not have IDs, but we can be able to include them with just their biometrics or with simple documents, and they can be included. So tiered KYC is very important for inclusion.
Right, in just under 5 minutes, we will be wrapping it up. Again, if you do have a question, you can always just raise your hand. We will find our way to you, and be sure to pass on the question to our panelists. I think 5 minutes, just under 1 minute, each one of you could just share some parting shots of utter wisdom that I have my pen here, I'll be taking notes. Yeah, I think let me start here to my left.
All right, so I'll just, I'll write on the back of your last question that you raised to the panel. And for me, yes, ultimately it is instantaneous payments that count, because more than anything, that is the true desire for an individual, for a corporate treasurer, in a large company. But one thing that we also need to factor in is, you see, most times when there's something new, there's always that rebate of a threat towards it. And the way that can be curbed with the interoperability that we will try and achieve is to ensure that the level of cyber security for the services that we're offering to these clients is paramount. We have seen it in a couple of the financial institutions, in the fintechs and the telcos, but ultimately the one thing that will drive financial inclusion, enable everyone to participate once we have instant payments running, is the establishment of trust. And for me, I believe that comes with the paramount cybersecurity around the services that we'll offer. Thank you.
Thank you for that. John, very briefly.
Yeah, I would just want to share what there is a framework that can help our stakeholders understand where we can collaborate and where we can compete in what we call real-time payment systems. So this framework has what they call the rails. The rails in this case is the infrastructure. The infrastructure can be the switching platforms, it can be the fraud platforms. Then it has the element of what they call the rules. When the different players, banks, DFSPs come together, they discuss what are the common rules that we can agree to serve our people. So we can always collaborate on what they call the rails and the rules. then we can be left to compete on what they call the accounts and applications. Once you have the shared infrastructure, you can build intelligent applications of that. So Fintech A can differentiate itself from Fintech B based on their value offering in applications and accounts. That's something that we need as stakeholders in the financial inclusion industry to be aware of, that collaboration and competition can coexist. Thank you.
Yep. Thank you. So for us to achieve total inclusion, it's going to take continuously improving in all of the sectors that we are playing in. Fintechs are playing a very vital role. The banks are still very relevant. The regulators are still doing a very good job. So how to bring all of this together? How to cause for a common platform that will allow at the end of the day to extend to our end users, our businesses, our public sector, our private sector, the simplicity that we are looking for in our market, the reliability to offer the services, and also a secure platform. I think that is what we need to think about.
Sorry.
Ultimately, I think that businesses play a big role in promoting financial inclusion because they are dealing with more than one person. They are dealing with multiple, whether it's employees, whether it is beneficiaries, whether it is a border rider. So as aggregators, the onus is on us to make those processes as simple and as agile as possible. And I think that collaborating through interoperability creates a platform for these businesses to reach even more people and ultimately include them. How that is done, whether it is through USSD, which is for people who use a feature phone, whether it is through a voucher, whether it is through an app, whether it is through a debit card, it doesn't matter. Our ultimate goal is to include everybody, not leave anybody behind, and make borders matter less.
Thank you.
Okay, thank you very much. So I think it's really two things. We need digital payments, and then we need interoperable digital payments. And at the heart of this thing, one of the questions you asked that I want to lean in a bit on is we truly need all the players working together, including government. Because if the private sector is making all these moves, and then a bill comes up and that bill is changing everything, then the work the private sector is doing is to no effect. As opposed to, for example, you see in Tanzania, the Tanzania Instant Payment System, where the government is working with is advancing something, and of course, something is going to happen much faster. So this issue is actually very urgent, and we need everyone involved. So yes, I thank the organizers of things like this, because this is making the voice heard and is making more players get involved in the collaboration and the competition. As John Mark pointed out, they can actually coexist for us to address this issue that is very urgent. I'll just ask, imagine if you had to go through COVID and you couldn't make many of the payments you're making now digitally, you couldn't make them digitally. If you couldn't pay for your bill, if you had to pay with cash for your umeme bill. Those advancements, that infrastructure is what we are talking about. We are saying we need that infrastructure urgently for the small merchant at the end of the day, for the players in the far parts of the country and of the continent, for this ecosystem to benefit everyone across the board.
Thank you for that. Ladies and gentlemen, allow me to thank my panel today. Peter Kakoma, who is the CEO of Kanzuko, John Mark Sabunya, who is with MTN and also Fintech Platforms architect, Doreen Lukando with Bionic, she's a director of marketing and customer success, Paul Tamale with the Stanbic Bank, not forgetting Nathan Levi, who is with Standard Chartered implementation manager. Lady and the gentleman, many thanks for making time to share your utter wisdom with us. I did ask for a question, but unfortunately, I think John Mark just scared them off with the rails and could have sworn we're talking infrastructure. Thank you for that. Please make your way to the gallery. Nicholas will be taking some photographs in just a few. Nicholas, thank you again.
Thank you.
team. As we continue, again, like they have said, Peter has rightly put it as he was concluding, the ecosystem must benefit everyone. I know Ronald from Pegasus has been doing this for over 15 years. Pegasus has been here since time immemorial. Same applies to Uganda. So they have been trying to make sure there is an ecosystem that serves and benefits everyone. This year's Digital and Financial Inclusion Summit, Digital Impact Towards Africa, is presented by High People in partnership with Modus Box, Level 1 Project, Modular Foundation, and most importantly, UNCDF, United Nations Capital Development Fund. UNCDF is doing a lot of work in matters digital financial inclusion. If you have heard, during the COVID times, there was something that was about delivering of medicine home, delivering of contraceptives using borders. It is such partners that made those things happen. And even more interesting is the fact that this event runs under a project called Include Everyone. But again, UNCDF's new digital strategy is leaving no one behind in the digital era. The same, different words mean the same thing. Because when you don't leave anyone behind, you are essentially including everyone. With those very many words, allow me to invite Rita Cabanyolo to take us through a Q&A session about digitalization and financial inclusion with UNCDF. But as Rita comes, he will invite the person she's doing the Q&A with. I will request the production team to first play a brief video from UNCDF.
Africa has an estimated 456 million mobile phone subscribers. With the fastest penetration worldwide, it's hard to imagine that some are left out. In Uganda, 1 in 2 adults use mobile phone technologies. These services are growing rapidly and opening the door to the development of digital services that can impact millions. Yet there is still a big number of people who are left out of the digital economy. Smallholder farmers, women and youths and refugees are some of the economically vulnerable people at risk of being left out of the digital economy. These numbers show why digital technologies are becoming a must. For Peter Karaya, a smallholder farmer in Kiriandongo, investment in improved technology would boost his agribusiness.
Okay, farmers can better their lives if they have good agronomic practices, if they have good markets, if they have good extension services which are provided, and inputs, and finally they can be able to assess good markets and get good inputs.
The farmers' digital needs are far from served as 89% of smallholder farmers cannot access information over the internet. Millions of Ugandans use mobile money to transfer money to their families as well as pay for goods and services. When the mobile network goes down, the impact is devastating. For small business owners in Bidibidi refugee settlement, one of the largest refugee settlements in the world, access to digital finance would make a significant difference.
Ke business ni kuna momara ni maxup ide agrus kankine ko kadela nina yara atikini i center lakin inene sa aw kadela nina wo wokon ko do ko banki bobo kata igo de akata sala kadela nina ko wokon grus kankine bobo kata I banki.
There are several gaps we see in these value chains. Are there opportunities to digitize these value chains to improve the lives of not just the rural farmers, but as well as the small business owners, the middlemen, and indeed the village savings and loans groups that are sometimes the only source of credit to some of these communities?
With access to affordable and reliable energy, these communities can accelerate their business growth. Access to quality, affordable education is another challenge most rural communities have to deal with. Not only is education expensive for parents, school administrators also struggle with low turnout of teachers and learners. By enabling access to digital technologies, we can deliver better services for parents and learners.
So data is not accurately recorded, is not accurately stored, is not accurately used, and the tracking back becomes our challenge, becomes our problem as a district. It is better for us, actually, if we are to improve, we go digital and we collect this data digitally, store it, so that we can be able to use it even in the future.
In these communities where people have to walk about 7 kilometers to access health services, the time it takes for information from a patient to reach the health center is critical.
When we are coming to visit the patient, we don't have a good transport. Suppose my passport gets spoiled, and at that moment, I don't have money for repair. I used to put, because I used to see and cancel The patient calls you. I want you to give me
the patients actually call you.
Yes.
Okay.
And I want you to give me advice. Or else, he can send somebody to us.
Yeah.
You go and tell this person like this, like this.
And so these are the challenges that some of these village health teams are facing as they try to address the challenges of health access within these communities. And so we are asking ourselves, can technology play a role? Can digital service offerings actually alleviate some of the challenges we're seeing here so that we ensure that nobody is left behind in this digital era?
At the district level, the health sector has been relying on manual records to store patients and hospital information.
The sick people here come with their own exercise books. So clinicians record this information in them, including laboratory results. When they're discharged, they go with this information. So we don't have track of what has been done to this client. So next time they come, or if they lose this book at home, for example, then we cannot track what was done before. With digitalization, then we'll be able to maintain a record. And by a click of a mouse, probably we can be able to retrieve a patient's records, and that can help to ease decision making.
When health workers have access to digital solutions, they are better equipped to track patients' progress and monitor response to treatment.
ICT would, this is even delayed. It should have come to us much earlier, because with ICT, definitely the information would reach us in time. We would even get feedbacks from the rural centers to Lira Medical Center very easily.
Beyond connecting people, digital technologies are about transforming lives. With its partners, UNCDF aims to build inclusive digital economies that leave no one behind in the digital era.
Well, thank you. Thank you for that, those findings. And my name is Rita Caballero for anyone watching us. And ladies and gentlemen, let me now invite Chris Lucolio, the Digital Country Lead, UNCDF. And like Nicola said earlier, it's the United Nations Capital Development Fund. And this morning, we're delighted to have you. We're going to be very brief on this session so that we can move forward. Yes, thank you so much. And now we want us to take it from building rails to achieve full digital inclusion in Africa. That is what we're focusing on this morning. And let's kickstart it from digitizing me. And when I say me, it goes for everyone in this room and for everyone watching. So if you could talk about the identity, because several countries in Africa have tried to address identity with mixed levels of success. So what is required for several creative digital identity for all Africans to create that?
Thank you so much. This is a great question. And you're right that several countries have tried with mixed success. But I should say that I think what's most important to achieve digital identity is really, the political will, right? And I think we've seen here with this major push to have a national ID, now I understand that your national ID is what you need to get a SIM card, is what you need to get a passport. There are limitations, but my point is that there is political will, that there is
the push to have the right regulatory and policy environment to make it happen. Okay, and this is the key foundation. And so having that in place is the first step. Secondly, of course, and this has been discussed extensively here today, the right infrastructure. The digital ID actually means that I wouldn't have to take my ID out of my pocket every time that I need to be identified. If there's a means by which that can be digitized, so maybe I offer a number, a QR code, something that can be scanned and can be verified.
Okay.
Yes.
Thank you so much. And let's talk about the devices, because in the most mobile fast Africa, we see the cost of device is very still a sensitive issue. So how can Africans cost effectively produce and distribute mobile devices?
Another great question. I think that if we look at the populations that are in danger of being left behind, mostly it's rural communities, refugees, migrants, and what have you. And at UNCDF, we've highlighted something called the digital community entrepreneur. This is where we're leveraging people within the community to reach out to the doorstep, the last mile, to help with the distribution of digital-related products and services. Other companies, MTN has done something similar, Airtel is doing something similar. In other words, taking the steps to extend access to the last mile, because only then can you enable people to use digital products and services.
Okay.
I should also mention that there is, I believe, now local production of phones that's been started here. That's another step in the right direction, and I know other countries have done this to reduce the cost. The idea being that you enable more people to access these devices and be more digitally included.
Yes, thank you so much. And we're talking about, ladies and gentlemen, we're talking about technology, we're talking about digitalization, mobile phones, and all this needs internet access. And with the evolution and reach of content for e-commerce, financial services need to access great internet. But this is still very expensive. How can we make sure that internet is made public or commodity, a public commodity?
Well, that's always a difficult one. Indeed, internet access is still very expensive, especially here. I think that a lot of the work that we see being done, again, through the Fintech community, where you show viable business models that allow a company to extend its services to underserved communities and still gain value. Because businesses are in the business of making money. But when it's shown that there are valuable, viable business models that can extend services to these communities, it starts to make business sense to reduce those costs. And so part of UNCDF's strategy in making sure that no Ugandan is left behind in the digital era is really to foster what we call inclusive innovation. The idea being that if you can innovate with underserved communities in mind, innovate with them and for them, you can show those viable business models that will attract more of the service providers, the MTNs of this world, other service providers, to get down there and reduce these costs because there's money to be made.
Okay, thank you so much, Chris. Now, talk to us about digitizing my money. And just like I said, when I say my, it goes for every one of us and everyone watching us. How do we effectively build digital financial services that are inclusive for the poor in 3 levels? That is a store of value, payment instrument, and payment channel.
Thanks. So I've talked about this quite a bit, about how, the service that one might build for, an audience or target community here won't be the same as you build for, a rural farmer in Arua, okay? And so I think that in order to achieve that, really, to deliver value as you described, it's really that these solutions need to be designed within the communities. I know we work with several organizations in the innovation ecosystem in Uganda, and somebody has a very cool application. It's working well, but it's designed in a lab in Kampala. Embedding yourself within the refugee community in Chiandongo, taking people through your application. What do I press? What do I do next? In what language is it? These are the things that enable somebody to find value in your application and indeed to save using that application
Okay.
to be able to pay with it.
So that means that it should be designed within the community and for that particular
For the
community.
Yeah.
Okay, thank you. How about digitalizing my services? Because government services like health, education, and agriculture can effectively deliver or be delivered with digitalization. So how can or what interventions should be made, especially in the agriculture sector?
Yeah. I think that, again, we go back to policy and the policy and regulatory environment. I think, again, here we have quite an impressive push for e-government services. So when you're trying to get your passport, now you use an online platform. When you're trying to get your ID, there's a place you apply. I think first is the regulatory and policy environment to make sure that you digitize those services. But secondly, again, I think the danger is for those communities that will be left behind.
Okay.
So as you digitize services, coupled with that, you have to look at things like improving on digital literacy. Because again, if somebody doesn't know how to use the device, how to access the service, they won't be able to access it even if it's readily available through these platforms.
Okay,
So
thank
those are
you so
some
much.
things.
Thank you so much. And ladies and gentlemen, and everyone watching us on NTV, we are coming to an end of this panel. But before that, we have got something that every nation needs for every individual and for every community, that is privacy and security. So we're going to discuss on how digital, because digital is the new gold, that's attracting security, attracting privacy, bridges. So what should we put in place to ensure that digital rails like identity, applications, and financial services are secure?
Yeah, that's a longer answer than we have time for. But no, because there have been challenges. I mean,
Yes.
we've all sort of seen in the news recently, and this is across the globe. Security and cybersecurity are big concerns. I think that again, building awareness within the communities is a big deal. That people need to know what information is being collected and why it's being collected. And then I think again, I know that government has in place policy around cybersecurity and indeed the mandate for service providers to protect that data. I also think that the right partnerships need to be built because when it comes to security and privacy, the threats are changing every day. What you think you're protected against today, a new
changes,
task will come up
uncertainties
tomorrow.
happen.
Exactly. So the right partnerships, the right policies in place, but also engaging the community and educating them about the risks.
Okay, thank you so much, ladies and gentlemen. This marks the end of panel discussion.
Thank you so much.
He is Chris Lukolio. He is the country lead at the UNCDF, and I'm Rita Caballero. For now, I invite my co-MC, Wesley, to come and take us through the rest of the program. And please join me for a photo. Thank you. Okay, Anod is coming up. Thank you.
Thank you very much for that. I believe 2020 was a good year. Well, it was a mixed bag. We had locusts, then we didn't have the locusts. But on the brighter side, at least on the Fin space, it was a good year because the Parliament of Uganda passed on the 29th of May 2020 the National Payments Act. Now, legislation is key for anything to move forward, let alone the right legislation. Allow me to introduce my next panel as we do try to unpack this particular legislation, the Act, which is now a law. Back again, Doreen Lugandwa with Bionic. FITSPA, that's the Financial Technology Association, the company secretary, Brian Kalule, who is also working with Bowmans. Then we also have Malin Group CEO Malcolm Castillo, and last but not least, Agre Mugisha, Your TV Channel's CEO. Today I'm also getting a seat. Thank you. think in the spirit of keeping a bird's eye on my panelists, I'll stand for this one yet again. Like I said before, this particular legislation was passed, yes, it's now a law. If in one sentence, all of you could try and describe it. My apologies. The dancing session is coming up just after lunch. If all of you could kindly describe this particular legislation in one sentence to someone who has never attended law school, how would you sum it up? Let me start with you, sir.
Good morning.
Morning to you.
Can they hear me? Seems
Yes,
I'm not
yes,
audible.
we're getting it.
Good morning. So I'm a lawyer, so this should be easy for me. The National Payment Systems Act seeks to regulate payments, payment systems operators, and issuers of electronic money, who most people know as mobile money. So basically, it just brings all those people under regulation and under the supervision of the central bank, which is Bank of Uganda.
Thank you. One sentence.
It's pretty much a set of guidelines to govern how payments outside the standard bank framework are managed.
Okay, if it's a question of one word, intrigue.
Intrigue. That's okay. Okay, please.
Personally, I would say it's pretty much a brilliant set of regulations that was long overdue to help us move money electronically, and it's brilliant.
The running joke across the region has always been the fact that Uganda has arguably the best set of laws, that we do fail miserably at implementing them. What's to save us from ourselves when it comes to this particular legislation, please? The running joke has always been across the region that Uganda has arguably the best set of laws, but when it comes to implementation, we just cut the branch that we sit on half the time. What's to save us from ourselves with this particular Payments Act, which is now law?
I think for me, the key thing is that the central bank is very interested in implementing this regulation. It has involved all the stakeholders, almost all of them, into drafting, negotiating, and concluding this piece of legislation, and they are very keen on it. So I suspect in the same way they are keen on financial institutions, they will be keen on it. They will also be keen on the payment system service providers. So I foresee that it will be a smooth implementation as opposed to most other laws because of the keen interest of the central bank.
Supervision, definitely a big problem. Doreen, maybe you could touch on that particular question very, very briefly, then we'll move on to the interesting aspect of someone an aspect, I think you will guide me on which particular part of the legislation this is, but there's a part that allows for a fintech company to, for lack of a better word, test their particular platform without getting a license. You could touch on these two aspects.
Yeah, so ideally the regulation is meant to bring structure to any sort of form of space or industry. So this particular one accommodates innovation because we are a very entrepreneurial market. This type of legislation allows for people to come in with brilliant ideas, try them out, and see if they're ready for the market. The beauty about this is that these guidelines are meant to help protect the people who are supposed to use these innovations. So to ensure that before this product goes to market, it's actually safe, it's usable, and it meets the respective guidelines.
Right. The role of the regulator in this particular one is quite interesting. It's kind of far-reaching from the supervision to trying to understand how the transactions are going through. Give me a sense of where you feel this leaves the other stakeholders in the market. Are they really appealed to here?
Well, my take on this is that it's creating a barrier to entry, because especially when you look at the application, the structure of the fees, the application fees, you're looking at 10% of your total income. Then I think there's 5%, then a minimal capital requirement of about from 2 billion to about 10 billion. So at the end of the day, it's like they are favoring the old guards, for lack of a better word. So where is the fair competitiveness in this? It doesn't make sense at all.
Favoring the old guard. Then my question would be, were all the stakeholders consulted in this particular conversation before? No?
I don't think so.
Okay, clearly you're not called. Please, what do you make of this particular submission? The fact that he suggests that this just favors the old guard and just creates a barrier to entry for the wananchi.
I choose to look at it from two perspectives. Okay. Yes. On one part, he's right. Okay. Creates a barrier entry for the new entrants in the market. But at the same time, then we are talking about finances. We're talking about money. We're talking about money moving electronically, and that is something that must be regulated. You must minimize risk in that. And if this helps us do that, then I would say it's good to look at it from that perspective. It helps from that perspective, but at the same time, then it puts up a barrier to entry in the market.
As the resident lawyer in the room, I think you could touch on the issue of barrier to entry into the market. If we're looking at millions of Uganda shillings as a starting point before you can indulge in a space that was previously free entry, doesn't the legislation actually undo whatever good it's trying to promote in the first place?
Actually, the biggest barrier to entry, supposed barrier to entry under this legislation is and my panelists will confirm, is there's what they call the minimum paid up share capital. The regulation, there's a draft regulations under this act that says that if you're going to issue electronic money, you should have at least a minimum paid up share capital of 10 billion shillings. And then the next stage is, I think, the next category should have 5 billion, and then the one after that should have 3 billion. So now, on any view, this is a very, very huge sum. Most of the stakeholders have argued and pushed back on that, and they're saying that this is a prohibitive sum of money. The good thing, the regulator has been willing to listen, and they have taken note of that, and actually, as I speak, they are currently in a session to discuss some of these things, and they have shown that they are willing to revise that figure and to accommodate the innovators who may not be that financially endowed. So, in a way, it's not entirely, if that figure is revised to manageable limits, I don't think it's entirely creating barriers to entry. But on the other hand, we have to understand that payments really pose systemic risk. I think as of 2019, half of Uganda's GDP, most of the mobile money transactions, actually the entire sum of the mobile money transactions constituted half of Uganda's GDP. So that poses a systemic risk, and there is need to have that regulated. So it would mean that if people, it's only serious people who should be considered to partake in this.
I have a problem when you say serious people, because since when is seriousness measured by how fat your wallet is? And let alone who then gets to decide what fat looks like for a wallet? If that was the case, then you wouldn't have an Elon Musk, you wouldn't have a Bill Gates, you wouldn't have Steve Jobs or Tim Cook, because all these guys, once upon a time, their wallet was thinner than yours and mine. So who then gets to decide if some of my panelists here were not consulted and the legislation is now law? Who gets to decide?
Can you take that?
Okay.
So I think one of the methods to coming up with some of these frameworks is adopting best practices from other markets that have done something similar. And ultimately, that's kind of how many of these structures are built. I think that the regulator taking time to understand the sector locally, understand how we have built these businesses, the kind of investment put in, is something that needs to happen more frequently, more regularly, and be taken a lot more seriously. I do think that there are very many ways to manage risk. It doesn't necessarily have to be through a hefty capital investment or a hefty fine at the point of entry, but you could penalize for a certain set of breaches, if you will. So I think that there are very many ways to look at this, but I think that ultimately through organizations like FITSPA, through the UNCDF and FSDU that are helping to lobby for a lot of these changes, change will come, but as fintechs, we need to come together. As business owners, we need to come together and make the case for the regulator to understand the kind of businesses that we are running.
Malcolm, let me bring you back in and play devil's advocate. What the regulator and whoever actually passed the law, maybe what they are looking at is maybe based, I don't know if you're familiar with the Basel I, Basel II in international finance, where you create tiers of finance, and in that way you keep on stress testing the banks. It could be Wells Fargo, it could be Goldman Sachs, it could be JP Morgan, and they keep on stress testing them, maybe on a periodic manner. And because there are tiers to how much capital they are holding at any particular point, they can get to see whether or not the bank in question is stressed or not. Is this, with this particular reasoning, one could argue that maybe the same logic was deployed in this particular legislation. On that particular backdrop, wouldn't that then make sense and not be an impediment to entry?
Yes, definitely it does make sense, because I think there are three categories of the license. So when you go to the service provision, there is a standard one. It has 2 tiers. There is, I think, for the, I would say, guys who are doing high transaction, and the guy out of campus, or me and you, who wants to start a business, because they do not define what the minimal capital is. But then again, usually the devil is in the details. Then what is it? Again, who gets to decide? How do they come up with that? So there's a lot of gray also. So I've come up with that idea. I want to see how to, commercialize it, but I am not sure if I'll qualify for a license. And if I don't have it, I cannot operate. So chicken and egg again scenario. So what happens after that?
I think he has an answer to that.
Yeah, when you read through this act, and I think it would be as important as it may sound, and as it may be, when you read through this act, it's a bit unfair, okay? When you look at it from I think section 66, subsection 1, the minimum capital requirements, because it's holistic. It brings a whole lot more to the table, okay? Talk about the act being consumer-centric, which is absolutely key to this, okay? Let's talk about the which we haven't had, okay? We haven't had that, and it comes in and it regulates and the consumer is protected. Very, very important, okay? Before even anyone acquires any license, okay? Before we talk about the license. Then talk about the 12 months transitional provision for the existing license holders, okay? Which for me, I believe that's absolutely reasonable, that you give these guys 12 months, let them go through that process of 12 months, acquire the licenses. And then, of course, I looked at it and I saw the 6 months grace period, I think they give to the new entrants in the market to try out, okay, whatever they intend to do. And in 6 months, if it makes sense, if they feel they are up for it and they can do it, then they can go ahead and apply for the license and be able to get it. And so I believe it brings a lot more to the table than the impediment to market entry that we're talking about.
Brian, let me bring you back in. I'm beginning to worry. You could shed some more light on this. Apparently a key provision in the Act is a requirement for the payment service provider, a financial institution of microfinance to deposits, taking institution other than the entity solely established to issue electronic money, that intends to issue electronic money in order to incorporate the legal subsidiary entry. I get the sense that this legislation might overlap with the legislation in place to try and watch or supervise the mobile money as it is. Could you just speak to this mobile money versus the Pegasus Act?
So actually, that provision is intended to cure that possible overlap.
Right.
Once the payment law came into force, then the mobile money guidelines ceased to apply. So now you realize that mobile money is predominantly provided by the telcos, the MNOs, who are regulated by the UCC. So that provision entails them to opening up a separate subsidiary whose regulator will be the central bank. So it avoids that possible overlap.
UCC, the central bank, who takes precedence then?
No, there will be separate entities. One will be, the telcos will remain regulated by UCC. Then the new entity they create will be regulated by the central bank. So in theory, they are different entities. So though in practice we know the lines tend to get blurred, but they should be separate entities. And that overlap is what was intended to be cured.
Doreen, just speak to us about the ACT framework as it stands right now. What stands out for you?
I think ultimately just the opportunity for collaboration between the different countries. In essence, to demystify what that means is that it's going to become one marketplace. It means that everybody would be able to transact and export and import from the same marketplace with different countries. I think this kind of regulation will limit that to an extent. So I think that there's going to be a need for a lot more conversations between the respective countries before this can become fully operational as one marketplace.
Malcolm, 6 months is what you're giving us the window before you can actually apply for a license. You're in the thick of things of developing fintechs and all this fancy software and platforms, should I say. Is 6 months really enough?
No, 6 months is not feasible or realistic, because when you look at most startups, they have a runway of about 18 months. That's 1.5 years. So that is more realistic. In any case, part of the requirements for you to apply, you need 2-year audited books. Where am I going to cook the difference? So these are, again, the small gray areas. Then, of course, the other issue that's not touched because of the application fees, and they are different. You have the application fee, the license fee, the annual fee, and then you have taxes to consider. So all this is just wailing on a startup after 6 months. So it just doesn't make sense.
Okay. 6 months.
I would say it should have been 12 months. When you run a startup, you realize that even 12 months, they actually disappear before you know it. And so I think should have been 12. I'm grateful for 6 though, but should have been 12.
I think one of the important things to consider with this bill is that it would have been important to segment the different, or to cluster the different businesses that are being regulated. How old the startup is, what specific customer are they targeting, is it B2C or B2B? I think all of those different parameters and categorizations should have been taken into consideration, but I still hope that there is opportunity for that conversation.
Brian, let me bring you back in. There's 2 words here that stand out. One is permissible and the other is prohibited transactions. I'm sure you've had a chance to go through the legislation. What do you make of these 2, permissible and prohibited transactions, and doesn't that then create for a very gray area as it stands? Brian.
Actually, when you look at it keenly, it's not any different from what is currently happening. That is what they prohibit, though it's not stated in the law. But so this legislation just codifies that. For instance, they prohibit you issuing airtime, an electronic money issuer issuing electronic money in form of airtime. So that's not allowed even now. So it doesn't really bring anything new that the the operators don't know it.
Right, we're just about to wrap it up. Maybe in just a few, I could hear your parting remarks. Agri, let me start with you.
Yeah, I love the spirit of the act. I think it comes with a brilliant spirit. Okay, it has its shortfalls that we can talk about, and of course we know the law can always be amended, as we move on and as we see how it applies with stakeholders and stuff like this. But the spirit of the law is good, and I think it was long overdue, and I am glad that it's here, and we can regulate and protect consumers and have people operate with licenses. It's brilliant.
Well, I'm not against regulation, I'm pro-regulation. But I mean, for the act to make sense, one, it needs to, again, iron out the gray areas, and then there should be a section, again, for the startups, for the different level you're at least there should be some kind of customization to that. Because at the end of the day, if this space is to mature, we need more ideas coming in and less ideas going out. But the way it's currently built, you're going to have the guys already there, and no one coming in.
I definitely agree. Regulation, well, this particular one has come with a lot of positives, credibility, control, sort of making the ground level for all players in the market in this particular space. But I think it's going to be very important for the regulator to engage the players within this space on a regular basis, not just once a year, but monthly, and ensuring that this regulation is actually suited for Uganda, for this market, its players, but also its shops, the challenges that these businesses are facing in being able to extend solutions that are solving problems locally.
Right. Okay, so when you talk to most of the fintechs and other players in the digital space, they are always complaining that these international big tech companies provide services in Uganda without actually paying any tax, without, they are out there, but because of technology, they manage to provide services in Uganda. Now this regulation changes that. It provides that it would require anybody who provides payment services in Uganda, whether they're here or not, they would be required to come and get that kind of license. And that, in a way, helps the small fintechs. So the MasterCards, the Visas will also be required to come here and set up and obtain the license. So for me, that's a good thing.
Interesting when you said that. Ladies and gentlemen, allow me to thank my panel of experts, the Honoring Director, Marketing and Customer Services, Doreen Lukandwa, right next to me, Brian Kalule, who is a lawyer at Beaumont and also at FitSpa, to my extreme, at the end of the stage, we do have Yon TV channels, CEO Agra Magisha, and right next to Doreen is Malcolm Castillo, who is Malin Group CEO. Lady and the gentlemen, thank you again for making time to speak to us. As always, we'd love to hear your expert opinions. And right this way, please. And go for it.
Thank you.
All right. Thank you, Arnold. We have had 4 panel discussions, one for women, specifically for women, and others that have had great women representation. I believe they have discussed matters of very great importance to the industry. It was out by design that we made sure that the last panel addressed the issue of the National Payment Act. Those who are in the Financial Technology Providers Association, those that are members of FITSPA, you know very well there's been a very interesting debate in the group, in the WhatsApp group of the association, with people giving different views. So it was nice that we had Brian Cowley, who is the company secretary of FITSPA, who are leading our lobbying with the regulators. We hope and believe that the regulators will listen to the voice of reason and make sure that the good regulation they are bringing doesn't kill the industry. It instead empowers the industry. We are very much aware that the guys that started this, Yo Uganda, I'll mention again, Pegasus, are making sure that what they started doesn't die next year. We have had 20 years of financial technology. A regulation that is good shouldn't spoil the industry. Instead, it should be open for everyone to practice and be actively involved in ensuring that we are safe, happy, and productive. Having said all that, I would wish to remind you that the Include Everyone Summit, Digital and Financial Inclusion Summit, and Digital Impact Awards Africa are live on NTV. NTV, the analog TV, NTV, the digital TV, NTV social media channels, YouTube, Facebook, they are running live. They're also running live across different social media pages and accounts. If you're at home, you have any question, you have any comment, remember to send it. The hashtags you are running with are DR2020, that is hashtag DIAA2020, hashtag Level1Project, and hashtag Include Everyone. Again, for avoidance of doubt, this project is organized by High People in partnership with Level1Project, Modus Box, Modular Foundation, and UNCDF. I will repeat UNCDF, United Nations Capital Development Fund, UNCDF. Allow me to take this opportunity to invite King of Radio, Wesley, to take us through the next program. All I can say is the panels are over. We are going to have speeches and awards finally. Thank you very much.
Thank you very much, Nicholas, as well. Thank you. All right, okay. We're trying to make sure that we are still in our time frame, and we will really have, like, at most, there should definitely be an hour. We should be done completely. And next, I definitely want to invite the CEO, High People. And of course, that's none other than that's the mayor aspirant for Kampala. And of course, that's Nicholas, rather innocent Kawoya. Oyoye mayor of is coming in, and of course his theme is to digitize Kampala. Part of his manifesto is to make sure that Kampala is digitized in all angles, as in all angles, to a level of also dust bin collection as well. So it should be digitized as well. Thank you very much. Ladies and gentlemen, our incoming mayor of Kampala.
Thank you, the newly wedded King of Radio. We're excited. The panelists, we're very excited to have you today, and we're thankful you made time. I'm also very happy that right after me, Damali Sali will be running her second keynote speech, and enabled by High People, powered by High People, sponsored by God. I'm also excited that we have more than 40 fintechs participating in this event today. We are fintechs, and we are passionate to have our own. The nominees, it's 7 years of the Digital Impact Awards Africa, and we can't stop going. The partners, UNCDF, Modular Foundation, Modus Box, and the Bill and Melinda Gates Foundation under its Level1Project initiative. We're very excited for the support. I cannot go without mentioning, there is a popular word we used lately in football. We call people goats. And someone will say the goats are the greatest of all time. So I cannot live without mentioning the greatest of all time professors that I know, Professor Maggie Chigozi, for the support, the guidance and mentorship. We can never be less of who we are. We only become better. We are students of the world, and we wish to advocate for everyone to join the classroom so we can learn and transform the world forever. Secure digital financial services are just about to change a lot in the world. The digital financial services space now offers much more than sending money from a wallet to wallet. Today, you can do a lot of bill payments any day, anytime, conveniently. You can do cash outs, you can do buy airtime, you can do remittances, you can do bulk payments to people that live deep in the villages. Merchant payments are growing very fast. We have InsurTech, we have BankTech coming in. E-commerce is growing. I'm sure we have a number of them participating here. And in the broader sense, we are speaking to three things. We are speaking to payments, we are speaking to beyond payments, and we are speaking to transfers that should be making life easier. As we talk about digital financial services and the popular mobile financial services, it's actually very wrong for us to remember that they are very seamless and thus offer seamless user experience for everyone. They have helped widen the marketplace for many. So many can sell without walking anywhere anymore from their phones. We are being offered instant message integrations that are amazing, and it's all within the same ecosystem. The same technology offers you a simple and wide understanding of customers because it is their phones that they use most popularly to communicate, so they have understanding. And it's been the same generation where we have things like renewable energy sold on installments. So very many people can have energy, can have solar energy. I paid that installments. In Uganda, we have providers that not only provide solar energy, but they provide TV content. And you pay in a year or two. And that's the power of digitization of systems. Many call me Mr. Digital, maybe because of the reason that they have only known me for speaking about technology for the last 15 years. But I'm sure there are many like me, and we can only add to the numbers. Of course, this could never happen without generous support from our partners and sponsors. The Bill and Melinda Gates Foundation would never happen. We would never have the 7th edition of the Digital and Financial Inclusion Summit featuring Digital Impact Awards Africa for many reasons. But even during COVID, we are happy to celebrate our own. And what is happening right now is that through their Level 1 project, the Bill and Melinda Gates Foundation has helped in designing new systems for designing interoperable payment systems for financial inclusion. And we as high people are here to make sure, together with partners and all collaborators, the fintechs, the banks, the NGOs, regulators, governments, to make sure that we play our role in ensuring that we create an economy that includes and benefits everyone. In the end, we will all play a role in helping the United Nations achieve the Sustainable Development Goals. Again, I thank everyone, the nominees and everybody, the keynote speakers. Thank you for making time. We're grateful that you came. For everyone watching, I'm excited. We are live on more than 16 Facebook pages, to mention by a few. My good musician friend, Victor Kamenyo, Kasuku Live, and High People, and many others. Thank you so much.
Thank you very much. And please don't you forget to cast that vote and vote Innocent Kaweya as the mayor of Kampala. Speaking about voting, I think we're also blessed to have Lord Councillor, LC5 Rubaga. That's Victor Kamenyo also in our presence in the midst as well. So please, people of Kasubi, Kawala, make sure you vote that gentleman. Yes, Nicholas.
Yes, thank you, Wesley. Without wasting time, next on the agenda is a keynote address. The keynote address today is going to be done by Damali Sali. By way of introduction, Damali Sali is a senior chartered accountant. She is a trade development expert. She is a lover of coffee and Uganda. Ladies and gentlemen, put your hands together for Damali Sali.
Good afternoon, ladies and gentlemen. Thank you. I am so happy to be here, and Nicholas and Innocent, thank you so much for the introduction. I will be talking about how Africa can achieve full financial inclusion by leveraging digital technology. But before I get into it, I would like to take a moment to appreciate, to recognize, and to give special thanks to High People and its CEO, Innocent Kaweya, for being for being persistent and consistent in supporting digital inclusion and financial inclusion year after year, every single year. So I think they need special recognition for that. By extension, I also want to thank the partners of High People who have been mentioned before: Moja Loop Foundation, the Gates Foundation, Modas Box, the Level 1 Project, and the United Nations Capital Development Fund. Next slide, please. In my submission, I'm going to give a synopsis of the state of financial inclusion on the African continent as it stands for now. I'll also explain why financial inclusion is critical to the socio-economic development of Africa, and I'll give a few recommendations. Over the last decade, Africa has had some of the world's fastest growing economies, with GDP growth rates averaging above 5%. That was until 2019. Recently, in 2020, Bloomberg has issued a report that indicated 7 out of the 10 fastest growing economies in the world are in Africa. That is Uganda, Ethiopia, Ivory Coast, Egypt, Rwanda, Ghana, and Kenya. However, economic growth can only be socially sustainable if that economic growth is inclusive. And one of the main components of inclusive, sustainable economic growth is financial inclusion. Unfortunately, financial inclusion is one of those areas that the African continent is lagging behind other continents. On average, less than 25% of African adults have access to a bank account through a formal financial institution. Over 80% of these adults say that the reason why they don't have a bank account is that the cost of having one is too high, the distance to the formal institution is too far, and the documentary requirements to get one are too stringent. Next slide, please. Similarly, evidence shows that 45% of all businesses in Africa are more likely to lack access to bank credit, regardless of size. Obviously, the financing constraint is much more acute for micro, small, and medium-sized enterprises. And this is very, very unfortunate, because evidence also shows that micro, small, and medium-sized enterprises are the majority providers of jobs. Over 66% of all jobs in developing economies are through micro, small, and medium-sized enterprises. In Africa alone, we have more than 50 million micro, small, and medium-sized enterprises, 70% of which are in the informal sector. These businesses contribute over 33% of Africa's gross domestic product, making them critical to the socio-economic development of the whole continent. However, only 29% of formal small and medium-sized enterprises have access to a loan, have access to a line of credit, or have access to an overdraft facilities. The value of this credit gap for formal SMEs in Africa is over $100 billion, out of which 90 billion is to SMEs in sub-Saharan Africa alone. Financial inclusion, the importance of financial inclusion on the African continent cannot be overstated. Whenever a society or a population achieves financial inclusion, it is able to mobilize higher household savings, it is able to increase the number of entrepreneurs in that population, and it enables the people in that population to invest in themselves and invest in their family. Also, quite important, is that it enables the government of that population to have a lower burden in supporting or providing public goods and services to the population. The good news is that the number of women entering the workforce in Africa has been increasing steadily, and so have the number of women-owned businesses. According to the World Bank survey, about 30% of all businesses in Africa are owned by women, although women still face significant financial constraints to participate in the economy. This is despite the fact that the International Monetary Fund has reported that an inclusive economy can increase its gross domestic product by 35%, of which 7% is purely based on productivity. So I have a few recommendations for you, most of which have been made by a lot of the panelists here, but just 3. The first one is on the regulatory framework. Several African countries are still missing regulatory frameworks to guide financial inclusion and digital financial inclusion, for that matter. And those that do, the regulations are so stringent around the know your customer requirements that govern digital financial services. So my recommendation is that there is a need to review the regulatory frameworks so that they enhance rather than curtail financial inclusion. Second recommendation is around interoperability. A global payment system survey conducted by the World Bank indicated that only 20% of digital financial solutions available were either partially or fully interoperable. This limits the attractiveness of technology-based solutions to customers and leads to low usage. I therefore recommend that the providers of digital solutions develop solutions that are based on level 1 principles, one of which is interoperability. And it has been discussed extensively by one of the panels. The last recommendation is that government should digitize its services. In any country, the government is the largest provider of goods and services, and therefore the largest provider of financial services. Governments on the continent need to start embracing digital technology in the provision of services to all people, but especially to poor people, to vulnerable people, and to women. So my final recommendation is that the governments need to develop infrastructure backbones that support the digitization of financial services in a manner that is inclusive. With those few words, ladies and gentlemen, thank you so much.
Thank you very much, Damali Sali, for that keynote speech right there. Without wasting time, ladies and gentlemen, allow me also welcome, as Innocent has said, the greatest of all time, Professor Maggie Chigozie, to come as a guest of honor, give a speech.
Thank you so much, King of Radio. Did you know he was newlywed?
And my wife is here, actually.
Oh, really?
Yes.
Hi, wife. Where are you? Okay. Good to see you. I want to start by, like everyone else, thanking Innocent and the whole team, the chair of the board, Honorable, who I think has not arrived yet, but has always been with us, and all of you for being here today and for continuing to take this so seriously. As you've heard, I've been here for the last 7 years. And do you know where we started? We started with the infrastructure. You know, we were worried about the submarine cable and the underground connections that were happening all over the country. That's how far back we started. And really looking at basically digital by itself and also finance by itself. It was really before we really got to realize that the two work together. That if we're going to have to move successfully, these two have got to go together. So for us as the Uganda Investment Authority, one of the priority sectors was ICT. And we were doing everything possible to make this happen, to make ICT available to everyone. The other priority sector, separate, was the financial sector. And we were trying to ensure that everybody had access. And we were looking at, yes, the individual, the common man. We were also looking at the investors. The investors needed to have access to these two areas, otherwise they could not do business. And yes, we then went on to regional. And now I am hearing Africa-wide. You know, it was East Africa. We were not, going to Nigeria and all that, but now we are. So now it's Africa-wide, making these two sectors and pulling them together and making them work a critical thing. So all the panelists have showed you how critical this is, that it happens. We looked at regulators, and I think even just last year, we were talking Moja Loop, we were talking Fintech, and we were saying, where's the regulator? Isn't it? Just not so long ago. So the fact that the bill, you are now discussing the National Bank's Payments Act, again is a step forward. So really, thank you, High People. Thank you for keeping the pressure on this sector, on these two, on this now one, I guess, on the eye on this by the government of Uganda. And please allow me just to make one recognition. It's very, very sad. We lost our NITA retired executive director, Mr. Saka. He was here with us. He's been with us quite a few times. So if you don't mind, can we stand for 1 minute? He played a key role in getting the government, which is the last point that Damali raised, government to use IT and government also to use the payment systems. He really, so let's just recognize him for 1 minute. Thank you very much. I think the important issues have been discussed. We need to attract more investors, and we can only do that if both these areas are working very well. And we has helped the banks in particular to improve customer care, but not just the banks. URA, education, everybody, because we no longer need to come near you. Sometimes you were mean, sometimes you were corrupt, and with these systems, the payment systems that we now have, you don't need to go anywhere, do you? You sit in your bed and you're able to pay everyone, and it's all very, very efficient. So we have made a lot of progress. As someone who's been watching it for 8 years, I am so excited. What would we have done with COVID, with the system we had 7 years ago? The economy would have collapsed straight away. But it hasn't. We've been able to keep on moving. We are meeting, I think half the people with us today are out there. They're on NTV, they are online, and they're able to be a part of us because we worked, High People worked. I don't know why I say we. I only come in for this event once a year, but anyway. I am happy to have been able to support it and to see how far we have got. So it's exciting. Financial inclusion is happening. Yes, still have a few problems here and there, and you've been talking about them, which means they'll be addressed. Advocacy is always critical. As a farmer, I no longer have to be, what was it called, a telephone farmer? No, everybody on my farm has a mobile phone. Everybody's linked to me. I can farm seriously online. And that is wonderful. Same for businesses all over the country. Education, URA, they no longer need to look for us. They can get their taxes without coming near us. So things like Mocash, MomoPay, all the people who are being awarded here today, thank you very much for picking on these opportunities, making them businesses. And here I want to recognize the young generation. The young generation see these opportunities before people like me see them. And you've jumped onto them and you've made them succeed, giving us services and possibilities that we never thought we would have. So I will stop there, but maybe remind you to vote for Innocent Kawoya for mayor. Let us seriously go digital as Kampala City, and we can do that by supporting Innocent Kawoya. So, hi people, all your supporters, UNCDF, and the others, thank you so much, and please keep it up. And I look forward to being here next year to see how far we've got, because every year I'm pleasantly surprised. Amen. Thank you very much.
Professor, thank you very much, but please, I would request you stay behind a little bit. We're going into the session of awarding, and also I'd request Madame Damali Sali to also come through and join us here, and also Nicholas, please come forward. And of course, our Lord Mayor.
Yes, thank you, Wesley. We are coming to the end of our program today. We thank everyone that came today. But like you may know, the Include Everyone program has been running for the full year. We have had a couple of digital and financial inclusion activities. We started with the 40 days, 40 fintechs activity that happened in May, June, and July. Altogether, we had over 100 fintechs from all over the world registering, and 41 took part. We had expected 40, but we did 41. That was 40 days for the fintechs. That was followed by the Fintechs Landscape Exhibition, which was the culmination of the 40 days for the fintechs. The Fintechs Landscape Exhibition had the 41 fintechs exhibiting and discussing what they have. Then in August, September, we had the Women in Fintech Hackathon. The hackathon was for women-dominated groups and women-led teams. Altogether, we had over 15 women-led and women-dominated groups coming together to design and develop solutions for financial and digital inclusion. It was a 5-day, 1-week activity that we hosted at Hive Collabo. It culminated in the Women in Fintech Summit that was on the 18th, if I remember very well, of September at Sheraton Hotel. This month we have had, for the past 2 months, we have been preparing for the Digital Impact Awards Africa, and they include F1 Summit, which is the culmination of our work this year. We expect to be back next year, bigger and better. To start with, without wasting a lot of time because we are running short, we want to give out the certificates to the different entities that took part in the 40 days, 40 fintechs project. What's going to happen is, this is an appreciation for the work they have done in the year, but also an appreciation for them honoring the activity and coming through to showcase what they are doing. Together we are 40, but we are only reading out those that have attended today. Many have come with apologies, and others have said they will pick their certificates. We shall, I'm going to request the representatives, one representative to come in front here. I read the certificate, you receive it, and another one comes. Jumia, Uganda. Jumia should be followed by Sente. The 40 days for the fintech certificate should be handed over by Ms. Daman Sali. Yes, Sente. Center should be followed by Safe Border. Safe Border should be followed by Enabling Finance Limited. Center. Safe Border. Enabling Finance. Yes, this is for the photo moment, after which whoever is picking their certificate, we are giving a framed version. Enabling Finance. Yugimat, one representative from Yugimat, Chap Chap, Chap Chap Uganda, True African. All these are participants of the 40 Days 40 Fintechs project. True African, your TV channels, Computing Paris, yes, Computing Paris should be waiting. As Computing Paris prepares to come, Bionic should be on standby. Yes, Bionic. Alptech ICT Solutions should be on standby. Alptech ICT Solutions. Thank you for being part of the 40 Days for the Fintechs initiative. Malan Group. Malan Group should be forwarded in a special way. Should be forwarded by Pegasus Technologies Limited. Pegasus has been here for over 2 decades. They started with National Water, Women Solutions, before going into other payment solutions. They have done us great, Pegasus Technologies. Yes, Council Code. Like I've said, we are going to give you the flamed versions of the certificates still. For those that we already flamed, Yo Uganda Limited. Again, Yo Uganda Limited has been here for over 2 decades. They started the idea of mobile money when people didn't know that mobile money would happen. The big companies didn't believe in them. Yo Uganda, True African, Pegasus. We were talking mobile money over 20 years ago, but people didn't know what we were saying. Today we all know what mobile money can do. Lend in a box. Yes, I saw Mr. Oscar. Lend in a box. The person from in the box must be out. Hamwe East Africa. Hamwe East Africa. Hamwe should be followed by file attacks. File attacks. File attacks, we are waiting for you. Mr. Malcolm, you can pick it on behalf of your colleagues from file attacks. Tradeless Uganda, thank you for being part. Flutterwave, Uganda, and Flutterwave Group, because both Flutterwave Uganda and Flutterwave Group took part in the 40 Days for the Fintechs project. Actually, that one was for Flutterwave Group, and this one is for Flutterwave Uganda. Lastly, Mindset Coders. Thank you very much. Those are the participants in the 40 Days for the Fintechs. Without wasting a lot of time, I'm going to hand over to Wesley and Innocent, my CEO. What is happening next is that the rewarding of the Digital Impact Awards Africa winners. Because of time, we can't play videos of nominees, but the good thing about this is all nominees know. They have been taking part, they have been voting. We can only announce the winners for selected categories. Again, because of a time factor. But a full list of all winners is going to be uploaded on the internet immediately. And because we are empowering and pushing for digital and financial inclusion, we know very well that all of you will find the details on the internet. Thank you very much.
Thank you, Nicholas. I request the greatest of all time, professors. They got professor to hand over the awards, but I'll also request you allow me to read the winners so that the awards come in a little bit fast. Thank you to everyone that was nominated and participated in submitting and voting as well. Digital Impact Awards Africa is here to change everything digital transformation. So let's start. The first winner of the awards tonight is for Super App Innovation Africa. That's Silver Safe Border. And the best digital response to COVID impact for Africa as well. The Silver Award also goes to Safe Border. Merchant Payments Innovation Excellence for Uganda, Chap. Lending and Circle Innovation Excellence for Uganda, Social Lend Africa. Super App Innovation for Africa goes to Ayoba. That's the Diamond Award. Content Innovation Excellence for Uganda goes to your TV. Someone from MTN, please pick the Ayoba Award. Sorry, I didn't mention Ayoba by MTN. Thank you. Ayoba, Super App Innovation for Africa. Ayoba, Diamond. Ayoba is this one. Your TV. Basic Commerce Innovation Excellence, Jumia for Uganda. Agri-Tech Innovation Excellence for Uganda, Hamwe. Best Digital Response to COVID, the Diamond Award goes to MTN Group. Wear it for me. Best Fintech Merchant Payments for Africa, Flutterwave. And we have a new award that is celebrating regulators that are doing as much as they can to make sure our industry, especially the fintech industry, has policies that favor innovation. And that award is for the Regulatory Financial Inclusion Rails Award. It's an African award. The first ever recipient is the Bank of Tanzania. They deployed the Tanzania Instant Payment Switch that is called CHIPS, which I'll deliver this to Tanzania. The Fintech Investment and Inspiration Sprinter for Africa award goes to Paystack. I'll deliver this to Nigeria. Fintech Aggregator Excellence, Platinum, goes to Bionic. Sorry, the order will be bit disturbing. The best financial inclusion impact goes to MTN Momo. Fintech Aggregator Excellence, we have 5 awards: Diamond, Platinum, and Gold for the Fintech Aggregator category. So, Fintech Aggregator Excellence, Gold, you're Uganda. Digital Customer Experience Excellence, Utilities and Government Services, National Water and Sewage Corporation.
Best Card Payment Excellence, Stanbic Bank. Digital Banking Excellence, Standard Chartered Bank. Speed.
No, that's National Water.
National Water? No, it's not.
Okay, let's have
National Water?
It's National Water?
Congratulations.
Stanbic Bank. Stanbic.
Fintech Aggregate Excellence, Platinum, Craft Silton, Geneva East to Nairobi, Standard Chartered. Brand and social media excellence, consumer goods, Mobit Products Limited. Digital powered campaign excellence, Stanbic National Schools Championship. Best brand on social media, financial services, telecom, IT, Stanbic Bank. Community banking excellence, Centenary Bank. Community banking excellence, Centenary Bank. And the last two awards.
Centenary Bank.
Women Financial Inclusion Award, Pride Microfinance.
Centenary Bank.
Fintech Aggregator Excellence, Gold, True African, Centenary Bank, and the Diamond for Fintech Aggregator Excellence that goes to Pegasus Technologies.
Pride Microfinance. True Africa.
You are which one?
And he was what?
You are?
True Africa.
We are also very excited to celebrate for the first time women in fintech leadership. And we have the Women in Fintech Leadership Award that goes to a personality. And we are glad to celebrate our own Doreen Lukanda from Uganda, who received the first ever Women in Fintech Award. And lastly, for everyone that was watching, we are very glad and congratulations to everybody that was nominated, to everyone that has received a prestigious certificate from the most authentic brand in awarding digital excellence in the continent. We're very delighted to work with you in a journey to ensure that the world achieves full digital transformation on time. The Digital Brand of the Year Award 2020 goes to Standard Chartered Bank. Thank you so much, everybody. Thank you so much, everyone. Thank you, Professor Maggie, the greatest of all time. Professors. Congratulations, congratulations to all the winners. Thank you, Damali. May we please take our seats back. Thank you so much, everyone, for coming.
Right. Thank you so much for all the
congratulations to Standard Chartered Bank for being the brand of the year. 2019, the brand of the year was Stanbic Bank. 2018, the brand of the year was Centenary Bank. 2016, the brand of the year was MTN Uganda. So you are competing against each other. You're all doing very well. And we are happy that every year, each one of you is trying to outcompete the other in a good way, in a way that develops Uganda. It has been a good day. I've had Arnold Segawa doing 2 panels. King of Radio, King Wesley is the official host of High People events. Whether invited or not, whether sick or not, is always available. He had to cut short his honeymoon to be here for this event. He just got married recently, and I believe he moves with his ring wherever he goes because he's a married man. And we had Rita Kabanyolo doing great work. As we conclude, we have one unique panel discussion we are going to do. It's going to be moderated by Rita Kabanyolo, mainly in Luganda, because we believe that digital and financial inclusion will best be achieved if the least people are included. We have an informal sector panel discussion for women doing informal business. Abakyala abakola emirimu emitonotono, abakola mu butale, abakola mu maduuka, abakola ku myalo, etc. among others, abo bonna bali mu category ya informal women in business. Waliwo abali mu byobulimi ng'ebitongole nga hamwe Uganda bibayamba ofuna business. Waliwo abatunda ebintu ebitonotono ng'ebitongole nga sente nga Pegasus bibayamba okusasulwa. So lugenda kubaawo n'olukiiko olutonotono, simanyi oba pano mu Luganda kitegeeza lukiiko, era kubaawo ne debate ey'abakyala ab'enjawulo abali mu informal sector batunnyonnyole engeri mobile money gyebayamba, engeri ebintu ebirala gyebayamba. Omukolo guno gubadde live ku NTV. Omukolo guno gwateekeddwa High People na bapatena baayo omuli UNCDF, omuli Fintech zonna, omuli Bank zonna, omuli Telecom zonna, omuli Level 1 Project, omuli Modas Box ne Mojalo Foundation. Pano y'abakyala egenda kubeera moderated by Rita Kabanyolo, ali ku mukono gwange ogwa ddyo, ono ananye ye Wesley. Asobola okubawa ebigambo ebisembayo, then akwase Rita Kabanyolo omukisa moderating a panel.
Well, immediately after this panel discussion, we'll be having our lunch, so please stay around. There's a big feast for you organized by High People, and thank you. Rita, please.
Thank you. I recognize Wesley before you go as the couple of the year. Congratulations. You can take that award.
Thank you.
Thank you so much, and congratulations again. Yes, this is our last panel, and I can say we will be cut short on NTV. We will not be streaming live, but however, there are other platforms that are streaming us live. That we have Kasuku, we have got Innocent Kawe streaming, among others. And also now we're going to have, like Nicholas explained, abachala abakola emirimu egitali gimu n'egimu in the informal sector, because we know over 700 million people globally are in the informal sector, and just in Uganda 75% of women are doing business in the informal sector. Mbaniriza nnyo, nsaba mujje tutuule tulabe nga tuyamba omuntu ali eyo atuwuliriza era atulaba, era n'abali wano bonna okulaba nga twekanyako ku bintu ebitali bimu na bimu omuli mobile money n'omuli